Good evening, I'm Giuseppe Basili, I'm the analyst and trader. You can find at the websites www.fipstalkertrading.com, and I also have a blog at fipstalker.com. Good evening, today is Sunday, April the 19, 2015, and this video is a weekly review of the market I follow, and let's start right away with the euro dollar. So you see on the screen is the weekly time frame, and as you know, we have modeled the weekly chart of this pair using a trace on the weekly time frame that you can see here from the highs back in 2008 to the lows in 2010, and eventually we were able to model this 140 level here, which we're pricing to the first target 108.90. Price went much lower into that 104, the low here that you can see is the 104.60, 41, 104.70, 61 here, and it has been hovering around that level now for a few weeks. Price went again 2 weeks ago, trying to win those lows. That didn't happen, so this price is currently reacting around this level. So when we move to the daily time frame, we can see this more clearly. We also know, and we also know that when we trace from the lows April 2010 here to the new lows, we get the level of the next reaction lower here. So we won't see a strong participation from the weekly and daily time frame until on the downside, until we get into that 111.73. I mentioned this a couple of weeks ago. By the way, if you didn't see my videos because I was on holiday back to Italy for a couple of weeks around Easter, and but you will remember that I mentioned this level in the past. So the reason why I mentioned this level is that this is the level where we can anticipate participation on the downside on the daily. So what happened in the last few weeks is that initially we had the participation at this level 176.25, which gave 3 good solid days higher. The price did not continue higher, but rather broke this level again, but this was enough to give a free trade here, and price then corrected once again into lows here, and then the market starts moving higher again. So this is clearly a consolidation here, and some people like to trace trend lines like this. It's not something very relevant to me. I'm just gonna trace it to show graphically. I don't use trend lines at all. Graphically, to show graphically that this market is correcting at the moment laterally. So still believe that if we want to see the size participation downside, we need to get into this 111.73. Moving to the SP500 here, the mini futures. Let's go back to the weekly time frame again, and so as you know, this market has been responding to this 1802 level here, and has been kept moving higher into the first target. When we get into the daily time frame here, you will remember that we had the market responding to this level with a few days, which was identified with 6 days in advance. It was possible to time this level, and the market moved laterally for a few for 1 month and a half here, and then kept moving higher, but the market eventually came back to trade into the 50% level, and the level has been retested twice now. The low here is 2033, 25, 2032, so it's one point, full point. You might consider this retested. However, the actual entry was before. It was here in March. So this market is still moving laterally on top of support here. So we have support on the weekly at this 1800 here. We have support at 1960. And we have supported this 2032 with all these supports have targets above. Okay, so what we are looking at the moment here, it's a potential continuation higher here. We have the market responding to this 2069.50 here, so there's a potential for a continuation higher. That would be the first time that this market would actually respond to halfway back here. So it's responding at the moment. It's not guaranteed. This market will just keep moving higher. There's a possibility for a retest of this 2032. Okay, moving to the dollar index. This market has kept moving higher as we know, for a few months here, and then in the last month and a half it has been correcting here. We have 5-6 bars here around the same level, and we had a reaction at this 94.88. And I have identified an anchor after the fact that explains that level, and this is the 94.90, which could be retested. So if the market is showing lower lows here, so it's a possibility for this market to go back and retest 94.90, and that would mean for the euro dollar a retest of that 111.70. So that's what I'm looking at for this market at the moment. And we can also check and see that the all the way halfway back, it's actually being respected. So in order for this market to retest the 94.90, it has to move lower below the 96.85. Okay, so that's what I see in the dollar index here. Moving to the weekly gold. Gold, as I mentioned in one review I did at the beginning of the year on FX Street, gold is actually moving similarly to the balance sheet of the ECB. This might be a little bit strange, but that is something that has been, it's a fact, has been observed. If you look at charts, you will see that the gold versus the euro and versus the US dollar as well is moving accordingly or following the balance sheet of the euro area. So now that the balance sheet is being rebuilt, there is a possibility for gold to keep moving higher. Now, gold is on top of a level of is within an area of participation on the long side, and this market actually, when we look at it on the smaller time frame, we know that this market has actually broken the sequence of measure move lower here, which actually suggests participation on the weekly time frame from program trading, and that's something that I'll show you again here. I showed this in the past, and when we trace from the lows to lows here, we were able to capture this short 12.22, which price getting into the first and second target, and after that we had tracing from lows to lows. We had the violation of the sequence of measure move, which means that there is no more interest from foreign trading in pushing this price lower, and in fact this price has been moving higher since that failure. And as we can see here, price already reacted to this 1881 once. We have targets above this level has been tested again last week, and we have first targets of this potential move higher, which has been confirmed again into the 1238. So if you're long, you should stay long in gold and try to get it get it into this 1238 level. Moving to the US dollar versus Japanese yen. The US dollar versus Japanese yen had an impressive move higher. There's a sequence of measure move here on the weekly, which have been showing and also trading. And in August last year, actually wrote an article for FXtrade.com mentioning how it was around August the first year, how the price could actually move into this 108 and then 115.80, and that's exactly what happened. And the reason why it happened is because price found already participation around this 94 level. Now the next measure move, as you know, for the weeklies, not the dailies, that's for the weekly participation, the level that should be tested to see whether weekly participants are still interested in pushing this price higher would be this 112.90. And we mentioned this now since basically the end of last year, in December last year, when we saw this high, and then we saw also higher high most recently here mid of March. So that's where we would need to see price to test what weeklies are interested in doing. Now when we get into the daily chart of the US dollar versus Japanese yen, we know that we tested twice participation in this 116, and that's where we are potentially going back to. Now there are always participants on the long side as well as on the short side, and in the last few days and weeks we have seen this 118.93 118.90 area here being tested twice, and now it's being tested again. So we also had initially shorts pushing successfully this price lower into that 118.93, where the price stopped, where the move lower stopped here. And then at the second test, that area failed. So at the moment, bulls, although we saw this last move lower here, bulls seems to be stronger, and bulls at 180.90 are still maintaining this price higher. So if we get below 118.19, there's the possibility for this market to continue and retest this 116 for the third time, and we will need to then check and test whether this level would hold on. If that's not the case, then this market is going to continue higher. Okay, so at the moment this level is being retested, this area of potential support is being retested. It's not said that it's going to hold, and we don't know that at the moment. So moving to the euro versus Japanese yen, those who follow me know that we have been precisely and successfully managing and identifying the levels here that actually have pushed this price, kept pushing this price higher. And those who follow me will remember at the beginning of 2014 I mentioned this 136.77, and this level and area of potential support acted as support and then eventually broke but after breaking, we had price getting into the first target of this setup, and then we knew that after that the market would just move lower into that 122 level. Now, why is that? Because that's the way program trading acts on these markets, and program trading is it's a sizable a sizable part of forex volume. It's estimated around 50%. So you have to know what algos are doing in order to understand and try to foresee and forecast price, and get involved at plays where you want to test the participation of algorithms. And this can be done procedurally with a technique that I call Phipps token timing. And if you want to learn more about it, I will have a coaching program starting mid and end of May. So if you are interested, just let me know, drop an email. So as you can see here from this chart, the weekly has potential support at 122. So that's where we are moving at the moment. So the move has been steady down here since December basically, and there was also here participation not from these levels but lower levels, and this could be identified after the fact. But I also teach a technique which is called price discovery, and that allows to actually identify levels and then use those levels for trading later on. Like for example, in this case, this level, and there are different levels that we can use, and in this case, this would not be modeled correctly through this extension, but if we apply rules, for example, there was another level, potential level that could be used. Now, we identify this level and then we reuse those levels after the fact when we know them. So at the beginning we don't know them, but once we get to know them, then we can use them for trading. So at the moment we are just moving lower, and of course show this reaction higher, so we're going to use our last swing high here, and as you can see at this 50% level 128.72 there is a reaction there and potentially a freeze trade here for a continuation lower. The reason why we keep trading this market lower is because we have that 122 level below us, 120 level below us. Moving to the pound versus Japanese yen here, and back to the weekly. This market also has been moving in a very nice and technical way. We had this measure move, price never went below 160.75, confirmed the move higher. It took a few months, but eventually touched and exceeded that first target, and then same anchor here, as you can see. That's the power of knowing the way algorithms treat this market and the new highs. And as you can see, again, this move was much quicker, a few weeks, 6 weeks here into 186.35 and we keep applying rules. So as the market moves lower, we are going to look and test participation into that 173.30. I have a few students trading this market short into this level 173.30. So that's where we're going to see what the market is going to do. There's going to be some support here for sure. So it's good to keep trading this market lower into 173.30, and if you're short, exit your short at that level. And moving to the pound versus the US dollar, this market has actually been very weak, and those who follow me know that I'm looking for previous lows here in this market, and the reason for that is this market, likewise the euro, lost this all important 149.21. So there's no support below price. So the short On the short side, we actually looked at and identified a level from an important anchor here. And this setup, as we can see, found participation is 155.03 and brought price into the 146.93. Price hovered around this level for some weeks here and found participation, or we could say profit taking here. And we also have identified in the last in the last few weeks before the Easter break, there's other level, the 150.94, which obviously is keeps pushing price lower. Remember, this is an extension, so that means that the potential for this market is to move into the second target here. That would be right aligned with the previous 142.73 here. So that's not something that you should discount. So what can happen here this week is that we can see this price moving into 150.94 again, and then we can use the fib stalking timing to enter short towards new lows here. If we get above 152.02, that would be by important violation, however, not on top of a level of participation, so that could be short-lived. So you have to be always careful there. So for the weekly of the Australian dollar versus US dollar here, I don't show all the data here, but you remember that this market traded short, and actually the next level of participation short on the weekly time frame is going to be a level that I've indicated in the past, this 81.93, and this market has been moving laterally now for few weeks. We saw 2 weeks ago a lower low here, but there is the potential for this market to move it into 81.93. When we look at the daily, this lateral move here, at the moment the market is moving very quickly higher here. It's possible that it's already moving in extension, so my students know how to apply rules for extension and capture the next continuation higher if that's the case. Moving to the New Zealand dollar versus US dollar. Here's the data, and you remember that this market has been actually trading in longs for some time, and you remember how we modeled this price into the first target and aggressively here a violation, but that's only applying aggressive rules here, while we could actually model this market using this measured move, which initially was not respected but eventually started being respected and brought this price higher and eventually broke. And when it broke, you remember that I've mentioned another important level here, which is the old halfway back. We are not there just yet, so this market could still continue lower, and I mentioned a level that is very close here, the 0.7793, and that's an extension short. So that's where we should see participation if shorts will keep participating into this market, bringing it into and around that 168.59, which is the level that long participation could materialize. So this market is moving higher at the moment, clearly, and it also traded twice this 07435. This could be timed using the Phipps token timing and then timed again, and price is being pushed into that first target, lines up around that 07793. So again, if you're long this market, a good place to get out is this 07797. Euro versus Canadian dollar, another market I like to follow here. Here we go with the data, and as you can see, the Canadian dollar has been recovering, especially last week on the US dollar. So we didn't see the same kind of recovery with of the euro against the dollar, but the Canadian dollar has been definitely stronger, which is good for the Canadian economy as well. Now, you will remember in the past how I ended up modeling price here. We had this extension long, and I remember that this price is into an area of potential actual resistance, as I'm going to show you in a minute here. I need to get all the data. So when we actually have all the data here, you can see from the highs in 2002 and lows here, there was this level, an area of potential participation, short 136.28. It acted as a resistance in the past, is now acting as a resistance now that has been retested. So now when we look at the long side of things, we saw this price participated 106.66 and price went into the first and second target and well above it into that area of resistance. So if bulls have to continue, they have to hold a very close level here. And let me remove this. That level is 120.65. So if price gets into that level and bounces, then the shorts will be in jeopardy. But on the other hand, what could happen is that we actually continue lower. If that happens and we break the 180 and 83, then we're going to see a larger correction for the US dollar versus the Canadian dollar. So if that happens, the Canadian dollar should improve. Euro versus Canadian dollar is another market I like to follow, and those who follow me know that I've been looking for a lower price in this market since the end of May last year, and we got a participation initially around this 138.56. As you can see, it was capable of bringing price higher, and it was tested 1, 2, and 3 times here, and eventually that was the level was broken. So this area of potential participation height is not there anymore, and there is the possibility for this market to reach the previous lows here, and this move lower here could be modeled in as an extension here in the past, and one way of modeling this would have been using another bull anchor here, which is one of the way we model price, and actually this is an extension, so there's the potential for this market to get into previous lows here. And the reason why the market might reverse that is not because there are previous lows, but because this is a second target, and that would be profit taking from those levels. So that's what we've been looking at and seeing in this market in the past, and that second target has not been reached, but that's probably what we're going to see this week or next week. And this market continues lower and is being modeled by extension. Last but not least is the US dollar, the Swiss franc here. We go and this market actually, you will remember that after the cap of the back of the Swiss franc, we saw a reaction right at that 50% level, or 86.58, and the market then continued in extensions here, and we also modeled this market using an extension long here, which actually was participated a number of times here, 1, 2, 3, and it's being tested for the fourth time here. So there's still the possibility for this market to continue higher into that being an extension, that first and then second target, right around the first target of this larger long setup. So I see the Swiss franc as a long still at the moment, and only if we break this 0.9331 there is the possibility for a retest of this 0.86 0.8658. So this is it for today. I wish you a great trading and trading week, and as I mentioned, and I will mention also in newsletter, I'll be starting a new session of my Stalker Methods coaching program in May the 16th, and then the first review in May, end of May. So if you're interested, this is a very good program. It's 8 modules program for 7 months. I will take you by hand, and I will help you understand how algorithms control modern markets, and how you can model algorithms, how you can use the structure, the price structure that algorithms create in the markets to forecast a level of potential participation, as well as implement the Phipps token timing technique, which is a procedural technique to test the markets and enter the markets with a very small risk. And I will lead you also in defining your own trading system based on the basic components that I'll give you, which actually model how algorithms affect market price. Psychology is a very important part of this coaching program, and I will help you in 4 months of review of all the material, plus 3 months of development of your own trading system and testing of your trading system. So thank you very much for your attention, and I wish you a great trading week. See you soon. Bye bye now.